Yesterday, Nifty tested higher levels, but instead of trending, the market started balancing near 23,300. Now, with today being a market holiday, the big question is the market preparing for a breakout or another rejection? Welcome back to Mind Monastery. In the previous session, we discussed how the market shifted value higher from 22,500 to 22,900 and then attempted to build acceptance above that zone. Now yesterday's session becomes very important because the market moved higher but then stopped trending and started balancing. And today, that is March 26th, is a market holiday, which gives a perfect opportunity to step back and analyze the structure clearly. Let's decode yesterday's movement using volume profile and auction market theory. Earlier, the market rejected lower levels around 22,500, migrated value higher towards 22,900 and started building acceptance there. That was a clear shift in auction from lower value to higher value. Now the next question was, can the market continue higher or will it stall? Yesterday, the market opened and pushed higher towards 23,350 to 23,400 zone, but instead of strong continuation, it started rotating sideways and gradually settled around 23,300 to 23,310 region. This is a classic sign of balance after an upward move. Now let's look at the most important part, that is the volume profile. The POC is clearly developing around 23,300 to 23,320 region. This tells us the market spent most of its time trading in this zone. Buyers and sellers agreed on this price, and this has now become the current fair value. In auction terms, the market is currently in a balance phase near 23,300. Now, this is very important. Yesterday, the market did not strongly reject higher prices, but also did not aggressively continue higher. Instead, it accepted prices around 23,300. That tells us that the market is pausing and building value and not trending. So, the story of the market right now is lower value first at 22,500, then a higher value shift to 22,900, now balancing higher at 23,300. This is actually a healthy auction behavior. Markets don't trend continuously. They move first, then balance, and again move. Now let's discuss the key levels for the next session. But before going to the key levels, for tomorrow's session, let us understand how to detect the shift early. So my intention here is to tell you to how to identify the intention of the market using volume profile. Because many times it happens that the levels have been discussed, but the traders become confused on how to use those levels. There can be several scenarios that can develop tomorrow or any trading session to say. Let me remind you that this is how you react to the market movements, because predictions always fail. In markets, if you want to survive, you have to react to the market rather than predicting the market. So the first signal that can happen is what I call the leaving value. You have to watch for the prices moving away from POC or from the previous value area and not returning quickly back to the previous value area. It tells that the market is rejecting fair value. For example, if the market leaves the previous fair value area of 23,300 and the price moves above 23,350 and does not come back, that tells that there is initiative buying. So there is a possibility of the trend to continue in the upward direction. You have to also watch the second signal, that is acceptance outside value. This is where most traders fail. For a weak move, the price will break the previous value area high and then it will come back to the value area. That is something what we call the fake breakout. Now for a strong move, the price will break, it will stay outside the value area and then it will start building volume there. This is the real movement. So the key concept here is that when there is a breakout, along with an acceptance, we have to expect a move further. And if there is a breakout and there is no acceptance, then it is a trap. Now, the third scenario, what you have to observe is volume profile shift, or otherwise the POC migration. You have to watch for the POC shifting up or down. In an upward move, POC moves higher, buyers accepts price which are higher. And when the POC moves downward, it tells that sellers are accepting lower prices. This is institutional confirmation, and that makes it very much important. The fourth scenario that can build up is called the failed auction. It's a very powerful signal. What happens is that the price attempts to go higher and gets quickly rejected. It tells that that side is weak. For example, suppose the price goes to 23,400 and then there is a sharp rejection back to 23,300. It means that buyers have failed and the downside is likely. Then the last, that is the fifth scenario that can happen, is the range compression. A range compression usually leads to expansion. Well, let me tell you that this can happen in this session or the next session or the next to next session. Before a move, the market becomes very tight and the volatility is also very low and the range becomes very narrow, and then there is a sudden expansion. This is a classic thing to watch. First the energy is built and then it is released. So from now onwards, whenever we are discussing about the key levels for the next trading session, please keep in mind these scenarios which can develop during the trading session, and also remember the key points to watch for, because this will equip you with the basic insights which you can develop using volume profile and make you skillful enough for early detection of market intention. I hope that this will help you to make a few profits. Now let's look into key levels for tomorrow. The resistance zones 23,380 to 23,400, which is the recent high and also a kind of rejection area. And if it breaks above this particular zone, continuation is possible. The current value, that is 23,300 to 23,320, which is the current fair value and decision zone, above which it is bullish acceptance and below it is weakness. Coming to the support zones 22,900 to 22,920, which was a previous value area and a strong reference zone. Then further lower, one more support is 22,500 zone, which is a major demand from earlier sessions. So going into the next session, the key question is, will the market break out of balance or continue rotating? So if the scenario is bullish, there will be acceptance above 23,350 and move towards higher zones. If the scenario is range bound, then it will stay around 23,300 and continue sideways. And if the scenario is bearish, break below 23,300 and rotation back to 22,900 can be expected. If you found this analysis useful, subscribe to Mind Monastery and don't forget to like, share and comment below this video. Every day, we decode markets using volume profiles, smart money concepts and auction market theory. Because the goal is not prediction, the goal is understanding auction. Thank you.